Nolan Watson from Sandstorm Gold, thank you for joining us today. You've seen a nice uptick in your stock lately, and gold, of course, is doing better. But what is it about your latest results that really helped this?
Well, all of the investments that we've made over the last number of years have begun to mature, and so some of them have worked out tremendously well. A few others have had struggles, but right now Sandstorm has a portfolio of assets that are all in commercial production. The ones that didn't work out, we moved out of the portfolio, and so as we stand here today, we don't have any assets that are actually under development as we speak. And so we've got tremendous amounts of cash flow coming in from assets that have low cost of production, and they've got lots of exploration upside, and that exploration upside has been proving itself out. So things are looking well at Sandstorm.
Great. And in your results, or in your discussion with investors rather, yesterday you said that 2013 was the most transformative year for your company. Why is that?
Yeah, 2013 is a year where a number of things have happened. We've had everything from commercial production being reached, some of our last assets. We acquired another company, got a bunch of cash from them. So we actually sit here with $100 million of cash in the bank and no debt as it currently stands. We had a number of warrants coming due. Most of those have actually been exercised and now cleared the market, so that's a very positive thing for the company. We've reduced our G&A by 40%, and so it's just been a very, very positive year on a number of fronts. We had a couple of missteps, but those have been mitigated by all the things that did go well during the year, and so we stand here in a really strong position with lots of cash flow, and we're looking to grow.
Great. And I do want to ask about what happened with Colossus and Cerro Plata. I understand there were some problems there, but what would you say going forward you've learned from that experience, and how will it change what you do in the future?
Yeah, so during 2013 we did quite a bit of re-engineering on our due diligence and analysis process, and we have put together sort of a more detailed program. What we're trying to ensure, though, is that as a company we don't become so conservative and so slow that we're scared to do new deals. So we still do want to grow, we want to do it aggressively. With respect to Colossus, I think that if they would have spent another $20 million actually developing wells that could have been used for dewatering, for watering issues that they knew that long in advance, that they'd probably be in production today. And so we could have maybe done a bit more due diligence there, but at the same time, mismanagement is not something that we can always foresee in advance. Part of our due diligence process is assessing the management teams, and that's something that we'll probably put a little bit more focus on going forward.
Okay. And most of your mining deals now, most of your deals are with mines that are already in commercial production, save maybe a couple. Correct me on that. What are your deals going to be like over the year? I understand you probably do one big deal and a few smaller ones. Can you tell me a bit more about that?
Yeah, so for example, on the smaller end of things, we're looking at doing the odd $5 million deal here, the odd $10 million deal there. Those are pretty small, but when we identify a really good project that might not quite be ready for a full stream yet, something that they might still be working on permitting or finishing off a feasibility study, what we'll do is give them $5 million and get a royalty at that time, and maybe a right of first refusal to do a stream financing if and when they become ready to do a stream financing. But for the larger deals, what we're looking for are things that are ready to go, they're permitted, they're ready to be built, and they're low risk on the actual execution of building the mine. So we're not looking for complicated metallurgical projects, we're looking for things like open pit heap leaches and those types of things.
Okay. And so with financing, especially difficult for juniors lately, some have floated the idea that perhaps streaming agreements could help these companies. What's your view on that?
Well, I do certainly believe that streaming has a place to play, and our job is to find good projects and sell to those management teams why streaming is better than, say, them raising equity at 0.3 times NAV, which is incredibly dilutive and destructive to shareholder value for them. And so our goal is find the good projects, convince management teams where their share prices are trading below NAV, that this makes more sense for their shareholders.
Great. And just to finish off, I'd like to ask you your thoughts on the gold price. This year has been quite good so far. What do you see going over the next year?
Yeah, this year feels quite good. Last year felt pretty bad. And so gold peaked out at around $1,900 an ounce, and it came all the way down to about $1,180, and now it's ticking back up to about $1,360. And I think what you're seeing is just an abatement of selling from the ETFs. So the ETFs were liquidating gold at quite a rapid pace. It was dropping the price of gold. A lot of that gold is being bought by China and India, and what you're still seeing today is the same buying coming out of Asia but the ETFs have stopped liquidating. In fact, over the last couple of weeks, the ETFs have started to accumulate gold again for the first time. So you're seeing a very significant price reaction on the side of gold to that. I hope that will continue. I think it will continue. I would describe myself as pretty long-term bullish on the price of gold.
Great. Thanks very much for your time.
Thank you.